Hello student. So today's lesson we will discuss how to grow your capital, how to grow your Forex capital. So we are going to talk about the capital, the lot size to use, the leverage, the the entry point, the stop and the take profit order. We are also going to discuss the risks. So now when we talk about how to grow your capital, for example, assuming you have $20 as a capital, and you want to turn this $20, how will you? We take a look at this chart. So let's take a look at this chart. Here now, as you can see from the screen, we have leverage. So the leverage to use now, you can use high leverage. You use high leverage for it. High leverage. So you can, whatever brokers that you are using, you can use high leverage when registering the broker. So the lot size to use, since you are using $20 deposit for the trade, so the maximum lot size to use for this is 0.4. 0.4 lot size. So as you can see from the screen, 0.4 lot size. Assuming we are using 0.4 lot size, so our risk now, out of this $20, so we want to risk $8. I want to risk $8 out of this $20. Don't forget, our lot size is 0.4 lot size, and we want to risk $8. That means our stop loss will be around 40 pips. Will be 40 pips. 0.4 lot size multiplied by 20 pips which is $8. That's what we will risk. So that's what we will risk, as you can see from the screen. So let's move on now. Since we have $20 capital, $20 capital, I want to risk $8 out of our $20. So assuming we have a target like this, these are our entry points, and this is our take profits, and this is our buy entry point. What from our screen now, we want to risk $8 and to target 200, 100 to 300 pips with lot size with 0.4 lot size. If the price targets 100 pips, that will be 0.4 multiply by 100. That will be $40. So that means we already have $40 profits for this single trade. So if the price targets 200 pips, that will be what? If the price target 200 pips, that will be 0.4 lot size multiplied by 200 pips. So we have $80 as our take profit. $80 as our take profit. So we have $80 as our take profit. So we have $80 as our take profit. So that's how to grow a small capital to larger capital. So the question now, so we already have this, that's the buy entry. So we do the same, then the stop loss here will be around here, 20 pips stop loss. 20 pips SL, stop loss. So we do the same for the sell entry. We do the same for the sell entry, where our 20 pips stop loss will be here, where our sell entry will be here rather. Our sell entry will be here. Then our stop loss, 20 pips stop loss around here. Then our take profits now will be what? 100 to 300. Will be 100 to 300. 100 to 300 pips. So when the market now sell here, when you enter the market around this point, the sell entry, and take 100 pips, and the market now moves 100 pips, with your, don't forget that your lot size that you are using for this is 0.4. When you multiply it by 0.4, so your take profits now, your profit will be what? Will be $40. That is, you are risking, that is, you risk $8 to get, your risk now is $8 to get $40. To get $40. So that's it. You risk $8 to get $40. So that's it. So any question now? Any question? So if there is no question, let's move on. So let's take a look at the presentation. So when you take a look at this presentation now, you can see leverage, you use higher leverage. High leverage from ratio 1 to 1000, 1 to 2000 or unlimited. So the lot size to use, if you deposit, here now, the example for this presentation is $20. So if you deposit $40, so that means you are going to multiply by 2. See, this is what I'm trying to analyze. So when you take a look at this now, take a look at this.
What if we have, like, we are not allowed to use 0.4 lots in some brokers? So what can we use about what other lots can we use?
Pardon? Can you please come again? If I get you right, you mean if you are not allowed to use 0.4, are you with me? So what I'm trying to analyze now is that if you are not allowed to use, if I get your question right, you mean if you are not allowed to use 0.4 lot size. That's why I tell you it depends on some brokers. So to me now, the broker that we are using with $20 and unlimited leverage, you can use 0.4 lot size with $20. Hello? I think it's network issue. So let's move on. So when you take a look at this now, this presentation, you can see high leverage, high leverage. The lot size, 0.4 lot size and above. So risk, you want to risk 2% of your deposit, 2% of that $20. So let's come to this area. You know, we have the support and the resistance. So if you want to, based on your course, we did something about, I think that is non-directional bias, I mean. So for you now, we don't know where the market is moving to. All we want to do is either to buy or to sell. It's either to buy or to sell. So when the market now moves to cross the resistance zone, so we place a buy entry after the market crossed the resistance zone, and we use 20% stop loss, 20 pips, 20 pips stop loss, I mean. We use 20 pips stop loss. Then we target 100 to 300 pips. So the same thing for the sell entry. When the price crosses the support zone, we place our sell entry here. Then we target sell entry here, the stop loss 20 pips stop loss. Then we target 100 to 300 pips take profit. So any question? Any question? Please, I think you can use the chat for your question. So if there is no question for now, let's move on. So let's quickly move to, so this is the overview now. Let's move to the charts so that you can so this is the chart now, as you can see from the screen. So here now, as you can see, so let's take a look at this place. This GBP USD, I think it is this area is GBP, maybe retail sales news. So when you take a look at this screen now, last week the news says the actual is greater than forecast before the news come out. Actual is greater than forecast. So after the news come out, we can see that the forecast is greater than the actual. So that's why you see the GBP falling here. So for you to do this now, what we need to do here so we are using non-directional bias now for this trade. So for you to do this, what you need to do is to pick out your tool like this. Assuming we are to go long means buy. So around this area, here, we enter a price like this. So we double click. So since we are using 20 pips, as you can see from the screen, and since we are using $20, so our lot size 0.4 lot size, the risk, we want to risk $8. So our entry point now for this is that's the entry point. Then let's come to take profit. Our take profit order now. So if you want to, let's 200 pips. So when you click on it, you can see the price will change. The price will change here. So the stop loss. So our stop loss now, we want to risk 20 pips. Click on it. You type the 20. Then click on the price here. You can see that the price changes. So what we will now do now, you will now go to your broker. You go to your broker. You input the lot size 0.4. Then the entry price, that is for long position to sell. Then the take profit, if you want to take profit at 100 pips or 200 pips, you set it. Then this is the price. You copy this price and you paste to your take profit broker. Then you come to stop loss level. You want to risk 20 and this is the price. You say this price. This is your take profit price. So when we click on OK, now you can see this is it. So you also come to and click on short again, then you do the same thing around this place. You do the same thing. We want to risk 20 pips, lot size 0.4 lot size, and we have $20 capital, lot size 0.4, risk, I want to risk $8 out of our $20. So all is the price, our entry price. So assuming we want to take our profits at 200 pips target. So you can see the price will change now. So this is the price that you are going to enter at your take profits. So here our stop loss be 20 pips stop loss. We want to risk 20 pips. So you copy the price and you paste to your stop loss. So when you click on OK now, so you can see. So if the market goes short, if the price goes short after the news, then since you already set the entry point for the sell, the order will sell and you take your profit here. You can see. So when you take a look at this now, so let's take a look at this here now. Our entry point, here now is 27.00. So the take profits when the market reaches almost 600 pips, 500 to 600 pips. As you can see from the screen, we have 500 to 600 pips from the screen. So that's how to grow your account. If there is any question, you can use the chat. So if there is no question for now, I think we need to move forward. So let me let's any other question? I can see you, Michael. I understand now, sir. Okay. So any other question, Michael? Any question? So let me quickly summarize this now before we end this class. So when we take a look at our analysis, we have $20 capital. We have $20 capital. So if we buy with this $20 capital, so we want to risk $8 out of this $20 and want to take our profit at, let's say, 200 pips target with 0.5 lot size. So that would be what? 200 multiplied by 0.4 lot size. So that would be what? 80 That'll be $80. So that'll be $80. So for you, if you are using a low leverage broker, so you can reduce your lot size, this 0.4 lot size to 0.4 lot size to 0.2 lot size. You can reduce to 0.2 lot size. So from our chart, so you can see that GBP USD moves 500, okay, at 500 to 600 pips. So you can deposit like $20 to $60 if you want to do that. So assuming you target 500 pips, target, so that'll be what? 500, this will now turn to 500 multiplied by 0 points. That'll be what? That'll be $200. $200 per trade. That'll be $200 per trade. So if you do that on Tuesday, you also have another chance again on Wednesday. You do that Thursday, Friday. So that'll be $800 per week. So the question now is that how can you get these 200 pips moves? Where can you get these 200 pips moves? So that's the question I expect you students to ask. Where can you get these 200 pips moves? Where to get these 200 pips moves? As you can see from our previous charts here, so you can see that here now GBP USD moves 500 to 600 pips here. So you can get this when the market has high volatility. That means during overlapping session. During overlap session you can get it. Then 2, you can get this high pips move during the news, during the major news, not just ordinary news, during the major news, the retail sales news, the NFP, the CPI news, the trade balance news, the employment and non-employment news, so you can get it there. So these are the major sessions that you can get these high pips. So the focus for this lesson now is that with your $200 capital, you want to target high pips. You want to target high pips. Then where can you target these high pips? During volatile, high volume market. During high volatile market, so you can get these pips. So any other question? Any other question? So can we use our meta to set the entry order for sell and buy entry, or it has been from our broker? So what I'm trying to analyze here is that you can use any broker that you like. So you can use metaphor to set your entry. You can use metaphor to set your entry. All what I'm trying to analyze since morning. That is why I use, when you take a look at this chart now, you can see the short position. I use $20 capital. 0.4, then you copy this 0.4. That's what I've been saying since. You copy this 0.4, then put it inside your Meta 4, Meta 5 platform. Then the price, you copy this price, you put it inside. Also, the price for the take profits. You know, in Meta 4, they deal with lot size and entry price, take profit price, and stop loss price. That is why you are going to use this so that you can know the exact price to set. So you can know the exact price, the actual price to set. So any other question? So I think we need to end this lesson now, since there is no other question. So before I end this lesson, let me summarize it again before I end the lesson. So let me quickly summarize before I end the lesson. So as you can see now, we have $20. We have $20 now. $20. So we want to risk $8. We don't risk all our $20. That's where our risk management comes in. So we want to risk $8 with what? With 0.4 lot size. So maybe today now, when we trade, we target 300 pips take profit TP. That'll be what? 0.4 multiplied by 300 pips. So that'll be $120 for today. So maybe the news is over and the volatile time is over. So tomorrow now, so day one, this day one now, we have $20. So day one now, day one we have $120 as our profit. So day two now, maybe we target 500 pips. As you can see earlier, the GBP and the USD is around 500 pips. Maybe we target, okay, let's say 400 or 500 pips. Multiply by this, by 500 pips, multiply by 0.4. That's around, that'll be 200 pips and $200. $200. So day three, you do the same. We target 150 pips or 200 pips. That'll be $80. So at least 100 to 300 pips. The volatile market will move 100 to 300 pips. So day 4, we target, we earn $200 as well. So When you add all these together, 2, that's 4 plus 5, that will be $600. If I'm right, that will be $600 for this week. So week 2, that's week 1. So week 2, you also do the same. You have $600 to $700. So that's how to multiply your account. That's how to multiply your small capital. And you need to be careful. Do not risk all your money. I repeat, do not risk all your money. At least apply what? Apply the risk management. Never risk more than 2% of your capital. Although we know that the $20 is small, but never risk more than 2% of your capital. So that's just the logic. So if the market goes wrong, you'll be able to have another capital to place a trade. So that's how to trade. That's how to trade. So if there is no question, so if there's no other question, I think we need to call it a day.